might go in terms of ramping up if they are reining in of crypto. And for more on that, I want to bring on Chester Spat, professor of finance at Carnegie Mellon's University Tepper School of Business, as well as a former chief economist and director of the SEC's Office of Economic Analysis, joining us once again. And Professor Spat, thanks for coming on to chat here. I just want to play a piece from the opening remarks in terms of where Gary Gensler is kind of operating from in terms of why he thinks it's so important to start reining in the crypto markets. Take a listen to what he said earlier.
Just don't have, I believe, enough investor protection in crypto finance, the issuance of these tokens, the trading, and particularly the lending. Frankly, as I've said before, I think it's more like the Wild West.
Claims of crypto being the Wild West for a while, Professor Spat, and you know, the lending protocol piece of all this is increasingly, I think, where the SEC is focused in on in the securities debate. I mean, what do you make of them maybe targeting that piece that has them, I guess, most worried right now?
Well, I think it's an interesting. It's an interesting direction, and I think likely to be a somewhat contentious direction. To what extent? I mean, it raises the question: to what extent is lending? Is that a security? We, in many other contexts, we often don't think of lending as necessarily a security. But one of the key prongs, of course, in the Howey test, which emerged in this morning's hearing, was the Howey test involves expectation of profit. You know, I think it's an interesting issue also from another perspective. Traditionally, there hasn't been so much transparency in lending, even in the equity markets, with respect to short sales and lending of securities. And it seems this raises the issue of whether there ought to be a lot more transparency and a lot more spotlight on those types of issues involving lending.
Yeah, the other pushback, too, from Senator Toomey there was maybe not so much in terms of, though he did disagree with him, the idea that the stablecoin would pass the second prong of the Howey test, which is about expectations of profit. If you have a stablecoin that expected to stay at $1 forever, obviously there wouldn't be expectations of profits there. But again, Coinbase and what they were trying to do was giving a 4% return to people on their holdings of stablecoins. Maybe that piece.
Right. Well, that's why I linked it. That's why I linked it to other aspects of lending. It seems to me, in part, what Coinbase is trying to do is setting up some sort of lending contract. Although the issue, I think, about the viability of such a lending contract is how in the current environment is a 4% interest rate sustainable. But that does arise also in other contexts, such as securities lending, at least when a stock is on special. Now, I think here the issue is the price of the stable coin necessarily, is it going to hold to that peg of $1? And that's why there's potentially some credit risk here, and I think that's what the SEC presumably has in mind.
Well, that's why I think it's fascinating to see, the issuer of that particular stablecoin, USDC, kind of shift away from what Tether and others have done, which is establish kind of credit risk there and the holdings they have. USDC pivoted right before we heard the SEC come out with kind of their pushback here, pivoted to just have cash and treasuries backing their stablecoin rather than other credit risks that are involved, like corporate debt. But to Senator Toomey's point here, it seems like he's taking issue with the lack of clarity at the SEC, saying, you shouldn't come out and maybe threaten to sue a company over this rather than get your thinking out there publicly. I mean, you've been involved at the SEC before. What do you make of maybe how close-knit, or I guess closed in terms of their own thinking internally? They haven't shared a lot about what they are thinking when it comes to crypto securities. Maybe Gary Gensler would push back on that and say, no, we've been pretty clear, but what do you make of it?
Well, certainly, as I was reading the public pronouncements last week from Coinbase, it's clear that that's the position of Coinbase. Coinbase feels they've been completely transparent with the SEC, and the SEC hasn't disclosed its thinking. And obviously I've not been party to those conversations, and so can't offer a definitive judgment about that. But clearly, Coinbase's position is that the SEC asked lots of questions, and is not saying much about its own views beyond the threat last week of the lawsuit. If Coinbase went ahead with this 4% product.
The other last thing, too, I have to ask you today, it has nothing to do with crypto, but it was one of the last questions I heard before we came on air here from Senator Kennedy talking about whether or not he asked Gary Gensler if he thinks he's the daddy of all these corporations because he's now, he was talking about climate risk disclosures and why the SEC might be pushing for those. Gary Gensler says because investors care about it and they want to know about it, so they're going to want to ask companies to disclose this. But it does seem like the SEC is really ramping up in terms of asking for disclosures there. We've heard a lot about a diversity push among board members of these companies. What do you make of maybe how much farther the SEC is willing to go in terms of pushing for some of these things that apparently Senator Kennedy says might be going too far?
Well, I think the SEC is pushing in some of these directions. It seems to me part of a broader push from the Biden administration on a number of fronts. I would say, I would say, I think that it's important that the SEC, focuses on its knitting, which is investor protection. It does seem to me that there are some other regulators in Washington who are better positioned to address some of the issues such as climate change, such as the EPA, and they ought to be in the lead on these types of issues. Obviously, if there are real risks that a company is confronting, then obviously there needs to be appropriate disclosure. But the current regulatory framework makes clear that companies must disclose material risks, and it seems to me that would provide a natural basis on which the SEC should try to build and should try to focus. And I think there's going to probably be a lot of controversy about some of the efforts to extend the SEC's range as part of broader initiatives of the administration.
Yeah, and I mean, similar to the way we've seen kind of all these agencies.
Good morning, family. As you heard, Gary Gensler is being grilled by the lawmakers. Family, we all know XRP is not a security. We just know that XRP will be skyrocketing very soon. So is Coinbase about to reinstate XRP on its platform? We all know that we have seen XRP relisted on Coinbase Pro. All right. So, with Coinbase saying this resulted from a technical issue and XRP trading remains suspended. I don't believe it's suspended. It's just temporarily paused. Paused. That's what's going on. We will be able to buy XRP off of Coinbase, but at this time, you are able to buy XRP on Uphold or BitTrue if you really want XRP. All right. So, admittedly, both instances fall in the category of weak evidence, especially as Coinbase has denied the rumors. But considering Coinbase's recent run-in with the SEC, relisting XRP would serve as an appropriate response. Okay. And you already know the reason why XRP was removed from XRP is because of the whole SEC lawsuit. Okay. Now, these videos I'm playing for you is definitely what's going on and what had happened last night with Gary Gensler and the lawmakers about regulating cryptocurrency. And he says there's only a few cryptocurrencies that he says that is not a security. So, with that being said, I'm going to play some more of the video. But once again, thank you guys for watching this video. I know I've been gone for a couple of days. Just been working and going to school for this poker dealing school. So y'all send y'all prayers up for me so I can pass this audition. But also, I have my faith in XRP. So I hope you guys have your faith in XRP and holding your bags, because I'm telling you right now, we will go through a market where it's going to plummet. It may go all the way down. Okay, a lot of people don't like the bear market. A lot of people love the bull market because they're making so much money. But this is your time. Once we plummet, once we go down to a bearish season, I'm not a financial advisor, but if you start stuffing your bags of all these cryptocurrencies that has utilities, this is your chance. This will be your chance to regain more bags into digital assets that you wasn't able to get before.
For more of this kind of information, I'm a co-sponsor of both bills. Of course, this would just be a start. Transparency is only a first step to getting corporations and the biggest investors to behave better. There's much more you already have the authority to do to make markets work better for the real economy outside of investment firm and hedge fund boardrooms. For too long, the financial system catered to the big guys, left everyone else on their own. Far too many stories of how insiders game the system. Big banks abuse customers while they make record profits. Brokers who've taken advantage of customers use the system to cover up and erase their misconduct. Private equity firms buy up companies and treat workers as a cost to be minimized. Workers as a cost to be minimized. Where have we heard that before? They buy up houses, they raise rent, they evict families even during a pandemic. And of course, no matter what happens to the workers at the companies they've raided for parts, or to the families in the mobile home complex where they've jacked up the rents, or to the larger economy, the big guys, the hedge funds, the SPAC sponsors, the big banks, the brokers, the big guys seem to do just fine. That system isn't sustainable. Increasing people's trust and faith in the market, in the financial system, will lead to more saving and broader participation. Yet some of my colleagues say we should let the market sort it out. They want to tie the SEC's and your and other watchdogs' hands. We know that's counterproductive. It's the same thinking that led to a market collapse 13 years ago that's led to decades of more and more investment flowing to a smaller and smaller share of the country. The last administration subscribed to that same always Wall Street first view and left this country worse off than they found it. The damage is too vast to measure. Our economy and our markets were no exception. Investors have fewer tools to hold management accountable. Savers, that's retirees, widows, families, have fewer protection. Corruption runs rampant. Existing serious conflicts of interest have too often been ignored. This administration is taking a different view, thankfully. The economy and the market should work for everyone, not just the well-connected. They should reflect the economy we all want, with broadly shared prosperity and a growing middle class that all workers can join. When that happens, people will have confidence that markets actually work for them, not just for Wall Street. We'll see more Americans save. We'll see more Americans invest in the future. Chair Gensler, I look forward to hearing about the progress you're making toward these goals. Ranking Member Toomey, welcome.
Thank you, Mr. Chairman. Chair Gensler, welcome back. It is good to see you despite our significant disagreements. I do appreciate your dedication and enjoy working with you. As you know, the SEC has historically administered securities laws on a bipartisan basis generally. During your confirmation process, I expressed concerns that you might stray from this tradition and use the SEC to advance a liberal political agenda, such as combating global warming and advancing so-called social justice, and push the legal bounds of the SEC's authorities to pursue disclosures that are not financially material to the reporting company. Unfortunately, this appears to be exactly what you're doing. You've added mandatory disclosures on global warming and, quote, human capital, end quote, such as board and employee racial and gender identity to the SEC's agenda. You've essentially said that if large investment advisors and pension funds like BlackRock and CalPERS, who invest other people's money, if they want information about global warming or workforce diversity, it must be disclosed, even if it's financially insignificant and irrelevant to a particular business. Even President Obama's SEC chair, Mary Jo White, opposed using the SEC's disclosure powers for the purpose of, quote, exerting societal pressure on companies to change behavior rather than to disclose financial information that primarily informs investment decisions, end quote. That's exactly what you're doing. And you're well on your way to politicizing the PCAOB after firing all the existing board members. See, it's not the SEC's role nor its expertise as an independent financial regulator with zero democratic accountability to address these political and social issues. Similarly, I've worried that you would favor the paternalistic push by some on the left to restrict investor freedom under the guise of protection while actually harming retail investors. Such harm may result from your apparent opposition to payment for order flow, which helped allow brokers to offer commission-free trading. Payment for order flow allows a broker to keep a portion of the price improvement obtained by routing a transaction to a wholesaler. To my knowledge, the SEC has not demonstrated any failure or harm associated with payment for order flow, which the SEC has allowed for many years. Banning payment for order flow could very well have the effect of eliminating commission-free trading, which would be a grave disservice to average investors. And likewise, you've criticized mobile apps that make investing easy and fun as, quote, gamification, end quote. But in my view, delivering a product that customers like isn't a bad thing. And I worry that you're attempting to fix problems that don't exist today. Today is the best time ever to be a retail investor in the United States of America. Retail investors receive the best execution. A person of modest means can share in the gains of the stock market at negligible transaction costs. We see the tightest bid-offer spreads ever. At least 4 major developments for retail investors made this all possible. Commission-free trading, accounts with no minimum balances, low or no-fee mutual funds and ETFs, and, yes, user-friendly technology like mobile apps. And investors can even voluntarily use a broker who declines payment for order flow but may therefore charge a commission. Now, despite decades of rapidly growing numbers of retail investors participating in stock market gains and enjoying more product opportunities at lower costs, some of my colleagues suggest that the markets are somehow rigged against retail investors. I'd like to hear how it is rigged. Don't retail investors receive dividends like institutional investors? Aren't retail investors entitled to best execution like institutional investors? Don't the value of retail investors' shares and those of institutional investors both increase when a stock price goes up? In my view, the SEC's job is not to make retail investing more expensive or unpleasant or difficult. In America, adults investing their own money should be free to decide how to do so. Let me turn to cryptocurrency, which together with the blockchain technologies, this is a very, very important and very promising new technology. As you know, cryptocurrencies are actively traded on many platforms. A really important question is whether a cryptocurrency is a security for regulatory purposes under the Howey or some other test. Now, based on your public statements, it's pretty clear that you believe that some are securities, but others are not. So I'm frustrated by the lack of helpful SEC public guidance explaining how you make this distinction. What makes some of them securities while others are not securities? Now, I understand that the SEC staff will privately provide feedback and analysis on whether a cryptocurrency is a security, but why is this analysis private? Why not publicly announce what characteristics make a cryptocurrency a security or not a security? In other words, how do you apply Howey and the Reeves tests?
Gary Gensler better answer this question pretty damn good. I'm telling you right now. Because I'm telling you right now, Gary Gensler, he just looked like he just has so much pressure again of not, he's saying that some securities, some digital currencies are securities and some aren't. Come on, Gary Gensler, just let the bag out, man. Stop playing.
Cases years after the product was launched. This is regulation by enforcement, and it's very objectionable. And I'm concerned it can stifle domestic innovation. So, Mr. Chairman, I hope we'll get a better understanding of your views on these and a number of other issues. There are many things on which you and I agree and where we could work together to protect investors, to ensure fair, orderly, efficient markets, and facilitate capital formation. I hope we can work together on these really important parts of the SEC's mission.
Thank you, Ranking Member Toomey. Today we'll hear Securities and Exchange Commission Chair Gary Gensler, no stranger to this committee. This is Chair Gensler's first appearance here in this role. Chair Gensler, please proceed.
First time, as you said, as Chair of the Securities and Exchange Commission. and I'd like to thank you all for your support in my confirmation this spring. I'd also note, I think, Chairman, you may be the 8th chairman that I've appeared before in this committee. I'm aging myself a little bit, but I think Chair D'Amato might have been the first that I was in this committee room. As is customary, I should note that my views are my own. I'm not speaking on behalf of my fellow commissioners or the staff. The U.S., as Ranking Member Toomey said, the U.S. is blessed with the largest, most sophisticated, and most innovative capital markets in the world. We actually represent 38% of the world's capital market, and that's when we're only about 23% of the world's economy. They're competitive, they're efficient, they're transparent. But I think we can't take our remarkable capital markets for granted. New technologies continue to change the face of finance for investors and businesses, and more retail investors than ever are accessing our markets. Our countries and other countries are also developing deep competitive capital markets as well. And though I provide greater detail in the written testimony, I'd just like to flag 3 areas for now. First is market structure. Market structure is fundamental to our mission, to protect investors, on the other side, facilitate capital formation, and that which is in the middle, fair, orderly, and efficient markets. How do we do that? It's through transparency and competition in those markets. So I've asked staff to take a look at a number of market structures. The Treasury market, that's the base of all other fixed income markets. The non-Treasury fixed income markets, corporate bonds and municipals, which, by the way, in the U.S. are twice to 2.5 times the lending out of banks, are loaned through our capital markets. Our equity markets and securities-based swaps as well. In each of these crucial markets, I think companies and investors alike benefit if we can increase competition, lower costs, and bring more transactions out of the dark. Second is a rapid change in technology. We're living in a transformational time, perhaps as transformational as the Internet itself. Now, I expect some members might ask a question or two about crypto, but actually the first thing I just want to mention is artificial intelligence. AI, predictive data analytics, machine learning are shaping and will continue to shape many parts of our economy. And while these developments, I believe, can increase access, increase choice, and lower costs, they also raise new questions about potential conflicts, biases in the data, and yes, even systemic risk. And now for the crypto, because I know that you're all, keenly interested. We just don't have, I believe, enough investor protection in crypto finance, the issuance of these tokens, the trading, and particularly the lending. Frankly, as I've said before, I think it's more like the Wild West. I've asked the SEC staff, working with our fellow regulators, the Commodity Futures Trading Commission, the bank regulators, the Treasury as well, using our current authorities, how can we best bring investor protection to these markets? I stand willing also to work with this committee and other committees of Congress if you take up any legislative initiatives. And then third, issuer disclosure. You see, since the 1930s, we've had a basic bargain. Investors get to decide what risks they take. That's up to investors. But Congress said that it should be based on full and fair disclosure of the issuers. Over the decades, we've updated what those disclosures are, and today's investors are increasingly looking for consistent, comparable, and decision-useful disclosures around climate risk, so-called human capital, cybersecurity, and other areas. So I've asked staff to develop proposals for the Commission to consider these potential disclosures, and yes, put these proposals out to public comment, put rigorous economic analysis against them, and what is it that investors want to see, and have the public comment. Beyond these policy areas, the SEC employees oversee 28,000 registered entities, more than 3,700 broker-dealers, 24 national security exchanges. You've got the picture. A lot going on in our capital markets, $110 trillion capital markets. Last month, we authorized voluntary return to work, but we've been largely remote for 18 months now. This speaks to the dedication of the SEC staff. I cannot compliment them enough. And while capital markets have grown, the SEC has not grown to meet the needs of the 2020s, though. Over 5 years ago, we were about 4 or 5% bigger, and so I just think that it'd be helpful to be a little bit wise and add to our staff. I hope that you can agree with me on that. Thank you. I look forward to your questions.
Thank you, Chair Gensler.